Welcome back to another episode of BDUP Exchange. My name's Adam, and I'm joined by James Doherty, and this is now episode 11. How are we doing?
Doing good, Adam. Happy to be back. Another couple of weeks down. Sorry we didn't pump one out last week, but back again today and another slow news week for us. So we'll have to find something to talk about.
Yeah, no, we'll scratch and claw, see what we can come out with, but got a bunch of good stories and markets and geopolitics and local politics and real estate. So I'll let you kind of kick it off wherever you want to take it. Um,
Yeah. I mean, start with I guess the economy. That's kind of what we talk a lot about. The market this past week, only a few things happened, but Fed decided to hold rates steady. There was kind of a lot of question marks going into it. Not necessarily the fact that whether or not they would cut rates, but kind of what the outlook would be from Jay Powell and kind of everyone in the committee there, what their sort of sentiment was. So they ended up keeping rates steady as expected, but have still making it clear that they do expect there to be two more cuts throughout the year, in line with expectations, as well as Powell saying that the economy is still in a solid position. That was kind of the first sort of story we got into. And then, of course, we have geopolitical tensions at a pretty high point. Last night, the United States bombed some of Iran's um, nuclear development sites, and so that's kind of where we're at right now. And markets are going to open tomorrow. It's going to be interesting to kind of see what happens.
Yeah, I am also very interested to see what happens at Market Open on Monday and how stuff moves because yeah, it seems to be a very eventful weekend as far as what's happened since Friday to Monday. And thinking about maybe we just start on this market piece for a bit and the Fed's kind of recent decision on whether this was the right decision to keep rates steady or whether it's time to cut rates. Trump has kind of been persistent about his political pressure and how Europe's getting rate cuts, and we're not getting the same kind of rate cuts over here. But I would say that it seems like some of the underlying fundamentals still seem to be strong. That well, like inflation has seemed to come back down, which is one of the reasons for the big push for rate cuts, seeing that the labor market's still generally been strong. And I think it was 139,000 jobs were added in May in our last report, which was in line with expectations. So people are certainly getting impatient, but I still see this move as being data driven, but would let you interject if you have any thoughts there.
Yeah, it seems like the token term at this point is cautiously optimistic. Like you were saying, that the labor market's still really strong, but it did come in slightly softer than people might have wanted to see. So maybe we're starting to hit a point where the labor market is going to be affected. And this is something else that I want to talk a little bit more into later. I have a few theories for where it could lead in the future, but the Fed is still in a tough position. And right now, from the most recent data that we saw, we actually saw improvements in inflation, which is not what people expected at all from tariffs. So there's still question marks. Was that because we bought a lot of American companies imported so many foreign goods before tariffs went into place? Are they overloading there? Are there other sort of mechanisms driving that? But still a lot of questions, and keeping rates steady seems to be the fair play. And again, not making too much of a shift either way, or giving the investors of the United States a false sense of confidence, or the other way around.
Right. And I think that it does give them some degree of optionality still, just in case inflation is stickier than we seem to think, because it seems that a lot of things are kind of quick to go down, whether that is just consumer goods, whether that's food. Energy has gone down, but things that haven't gone down as much are like services, are education, insurance. And those things, for whatever reason, it seems like you have to exert a lot of pressure to make those things go the other way. And I think having that optionality to, if you need to hold rates steady for an extended period of time, if you need to, God forbid, raise rates, if you have, say, we go to war in Iran and there is a massive spike in oil prices, and you have to raise rates to maintain the price level. And those are all scenarios that are not out of question at this point in time. It kind of shows how, and maybe this is a good time to pivot if we need to, but that these geopolitical matters certainly tie into the Fed's decision as well, or at least ties into the data that they're analyzing.
Absolutely. And kind of adding on to what you said, I was actually reading into this a little bit more. The S&P 500 is not nearly as compiled up of oil-based companies as you might think. I think it's less than 5%. I could be totally wrong, but I believe that's what it is. So this isn't something that in theory should have a huge effect on the S&P, kind of just the market itself. And something else that we've also been seeing is just how quickly the market rebounds from headlines. It's almost becoming more resilient to headlines. We've kind of seen this with retail investors and just how willing they are to embrace buying the dip and almost being encouraged when they see the market go down. I've actually been reading some things saying that retail investors are hesitant to buy when the stocks actually go up. It's such a weird sort of shift that we've had in the last few years. And you also have the implications of quantitative trading. So you just have things like that where the market is just going to react to things so quickly. So even if we do see a bit of a drop in the markets coming up, I wouldn't be shocked if it went right back. But I think it would be a good time to kind of introduce kind of what really is going on over here.
Um, yeah, maybe I can introduce someone to the problem. I think you did a good job covering it. I believe this was yesterday, maybe at like 4 or 5 p.m. our time, or later than that, that we got notice that the U.S. struck three sites of the Iran's nuclear energy program. This was something that Trump said they would make a decision on the next 2 weeks. I think earlier this week, and I guess a couple of days later, seemed like he made up his mind. And we're still kind of waiting to see how this is going to affect markets, but certainly is going to put a lot of people's eyes on how this unfolds, because you see big powers getting involved, and all of a sudden a little conflict can get a lot bigger. So it'll be interesting to see how it plays out.
Definitely. There's just so many, I feel there's so many moving pieces right now in the market, but it does just seem like at the end of the day, it is kind of being fueled by this underlying optimism and strength of the labor market. And something else that I wanted to touch upon, just kind of this bet on AI. And that's kind of what is driving a lot of these high valuations, these high price to sale ratios that we're seeing right now. One article that we were looking at, Sam Altman, he's the CEO of OpenAI. He said that Meta was offering some of his employees $100 million to join them, which is an absolutely insane figure for one person. But th this is how much these companies are banking on AI for the future. So if it really is what it says it is, and these investments that these Mag 7 companies are pouring capital into, and you might be lowering their earnings for their investors in the short term, but in the long run, the hope is that this is what's gonna uh, continue the strength of the U.S. economy and U.S. businesses.
Right. And $100 million bonuses is an insane amount of money. And I think it shows how, like, we on the outside think that we like understand like the importance of this stuff for the market, but like for the people inside to be doing that, and to have open looks into their products every day, still spending this kind of money, it really shows that, yeah, we're we don't even really fully comprehend how powerful this stuff is going to be. As someone who's in a job right now, I can tell you that we're experimenting with AI products to like build our pitch decks, build our PowerPoints for us, and it's building stuff that using very minimal inputs of like an Excel model and a market report that is coming out with decks that look a lot better than humans can do, especially within the time frame they can do them. So just an insane thing that's about to come to the workforce and is coming faster than I think any of us can really imagine.
Yeah, that's true. It's gonna hit like crazy, and like you were saying, it's gonna affect our workforce in a big way. And this is something I kind of alluded to earlier. I wanted to talk about, but and maybe just ask for your perspective on this. So, in a world of growing AI, as more companies implement it, employment is going to see a hit. AI is going to replace some of these jobs expectedly. And I'm just wondering what you think that's going to do to the market itself, because these companies are probably going to have better margins, better earnings for their investors because of AI, if it is what it says, what they say it's going to be. But employment's going to be down. I'm kind of just wondering how you think that's going to affect a market in the future. Are there going to be new jobs arising? What is that kind of future economy looking like?
I think that it's going to be a lot different than, and we're going to read metrics a lot different then than we read them now, because I think that you're going to see a world where GDP is going to increase exponentially and you're going to have unemployment is going to increase in the same direction at the same time. Um, and I don't know what that's going to do as far as what other jobs people are going to get, what jobs are going to exist, because there are just so many people who are going to be dumped so fast. And that like with robo taxis, for example, like Waymos that we were talking about, like all those people are not going to have a job in 2 years. And I think that I can say that pretty definitively from looking at some of this stuff. Where all those people go, I really don't know, but I think that this is probably a good time for the government to start thinking about what solutions are going to look like for those people and I don't know how you move forward from that because I really have no idea.
Yeah, no, sorry to drop such a weird question. It's definitely tough to think about, but I do think it's something that we do have to consider and look at and think about how that's going to affect our world, because how's that going to affect markets? How's spending going to be? It's going to be very interesting. So we'll keep you guys posted on that. Something a little further out of the way that's kind of tied into some of these things that's going on is we have a story about the Los Angeles Olympics in 2028 and kind of the preparation that's being made right now to prepare for it, but it's looking like it's going to be a bit of a challenge, a little bit more challenging than once expected. I believe the original budget by LA 28, who's running it, was about 5 billion. Now they've already added 2 billion to it, and we're still 3 years out. So this is something that's kind of developing as we speak. Of course, there's riots there right now, a lot of protests. We're still feeling some effects from COVID in Los Angeles in the film industry. Of course, the wildfires that caused billions of dollars worth of damages in the city, and just kind of how LA is gonna find a way in these next 3 years to put on the best performance for the entire world.
Yeah, I think that this is certainly going to be a big lift and a lift that's made harder when you have an executive office and president and kind of the federal level being at odds with the city and seemed like that they like by bringing the National Guard in kind of were willing to disrupt their authority in favor of federal authority. And those pieces really need to move together well for this to work and for them to have the requisite public transportation, for them to have kind of the funding that they need to pull this off. And in a city that they're trying to have this thing be no cars, have it be no new builds. And I think that they're going to need a lot better public transportation than they have to move all these people around the city to these different businesses to really feel the economic impact of it. So hopefully they can get their stuff together.
Yeah, some of those costs that you were talking about aren't even considered in their budget at the moment, these transportation fees. So kind of something that we've been talking about in the past with some of the universities in our country is just being on the right side of Washington's decision making, and you want to be in that position where maybe if you need a little bit of extra tax money, you'll be able to come across it. But I think here it said that there's going to be the equivalent of 7 Super Bowls a day for 30 days in Los Angeles. That is the scope that we're talking about for this event. And it has the potential to be so profitable for the city and so profitable for the country when it has so many different eyeballs on it from all over the world. But right now, it is looking like it's going to be a burden, and it's looking like the city's going to be have to add another 500 million, maybe creeping up into the billions onto their deficit, and it's just going to be a tough situation, but we're hoping that they can be resilient and find a way.
Yeah, yeah, and that's something that I don't even think about too much is that like we have a federal government that has all this debt, but then we even have these city governments so they can slap on as much debt as they want to. And it makes me nervous about how there are all these different tax instruments and all these people who just write checks and let them sit there. But um yeah, like you said, just really excited for them to have this chance to potentially capitalize and all these businesses to get all that traffic, all these hotels to raise their rates to the moon, um, getting all these people through the door. But we do have offices that don't have as many people coming up their elevators every now and then. And that's caused an oversupply problem that it seems like developers are going to fix.
Yeah, yeah, good segue. Kind of the office market in general, kind of highlighted in New York City. Um, Kind of what we've been seeing unfold in the last few years, of course, starting with COVID, a lot of companies went remote and a lot of them stayed remote for a little bit longer than expected. And this was an absolute travesty for the office market. Um, so in recent years, developers have not been constructing a lot of new properties because of these vacancy issues. But in New York, the amount of office supply is expected to contract for the first time in 25 years, which is absolutely incredible. This is due to a bunch of different factors that we'll go into a little bit more detail with a lot of this office to residential conversions, the lack of new development, as well as kind of this return to the workplace policy that's being pushed by a lot of big name people, Jamie Dimon kind of um, leading that stride, but it's looking like office as kind of the supply is decreasing. We also see increasing demand, so it's doing very well.
Right, right. And I think that getting some of that other supply offline, especially stuff that doesn't get people excited to come in to the office, because in a remote work world that you need these really nice spaces to be an extra incentive for people to come in and bring their ideas in where they can collaborate. So I think that that's something that I think is just a net good thing that we're able to move each space to its highest and best use. And I think that that's what's happening here. So this is a good development for sure.
You're right. If office is the place to be, it's gonna do well. Kind of something else we're seeing in New York is a lot of these Class A trophy class buildings with all the fancy new amenities, like you were saying, which everyone wants right now. They're starting to really be limited in supply. So you're seeing people look to Class B, Class C office space just to get in, which is a really great sign that that people are want this space, and then this lack of supply is creating um kind of adding on to that. So it's looking it's looking pretty strong right now.
Right. It certainly does. It certainly does. But just to put the brakes on it a little bit, like that there is going to be some time to all this like work through the system for all these office residential conversions to actually take place as far as the supply shrinking, and also for people who are shrinking their space, who are now subleasing their space for half the rent that the landlords would get otherwise, is going to be something that also needs to work its way through the system for tenants to be able to pay what landlords need them to pay in order for these buildings to kind of stay afloat.
Yeah, I mean, there's so many different factors that go into it, and something else that we've been seeing is kind of this city of yes, kind of mentality, kind of the zoning regulations and the changes that are being made to kind of pushing the effort to increase housing availability in New York City. So a lot of these office to residential conversions are very encouraged. One of them in the article was saying there's a 90% tax abatement for office to resi construction, which is um, obviously a great incentive, and it's making a lot of these projects possible that previously weren't. So, like you were saying before, it's just about finding the best possible use for these buildings and finding value wherever we can.
Right. Right, absolutely. And I think that having the city notice this and be able to put the right incentive in place to make it happen, I think that's a net positive for everyone. That's a great way to solve our housing problems, solve the problem of office leasing. So I think all of this is just an example of when governments and the private sector work together effectively, that creates good outcomes. So it's good.
Absolutely. Ending on a positive note. Who's winning tonight? OKC or Pacers?
Pacers clutch always. Those guys in OKC, they're soft. They won't come close. What's
It
your
does.
take?
Pacers are so sneaky. They always find a way. As much as it pains me, I think they might just find a way. But OKC's time, I mean, it might be tonight, but even if it's not, it'll be there plenty. They'll be just all right.
Agreed. Agreed. I read an article that said the Pacers win, that they might be the worst NBA champion ever, which might be possible. I have nothing to compare it to.
Disrespectful. It's so disrespectful. I mean, they Halliburton got voted the most overrated player in the league, and now he might just lead his team to a championship. Well, second to Pascal Siakam. That's the unsung hero, but
Right. Well, anyway, we will be tuned in. We will report back if we were right or wrong next week. But thank you all for tuning in and listening to this episode. It was great to catch up and go through these stories.
yeah, great to talk to you guys. Stay safe, and we'll see you next week.
See you then.